Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on May the 20th, the year 2020. It's Wednesday. Let's talk trading. How many methods are enough? I know many of you may have more than one method that you use. And as you traders all know, these videos are for educational purposes only. Your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. So, how many methods are enough, Walmal?
One. That's all you need. You just need one method that you are very good at executing and staying within the rules, because that's all you need to make money. You don't some people are literally jumping from method to method to method, and then wonder why sometimes they don't make money. And it's because they never become an expert. It's sort of like that the old expression that you're a jack of all trades and master of none. Well, would you rather go and be a master of something where you can make money, or would you rather be a jack of all trades where you kind of breaking even and getting along?
Okay, Walmal, let's do some disclosure. How many methods do you employ?
I probably right now use two, maybe three, and that's been my downfall to a certain extent. What I've done to go and try to or stop myself from losing too much money on things is I'm looking at it from the perspective of I've got my primary method, which is my Walmal method, which is where I make my core money. And then what I do is I cut back on other methods. And you may say, well, you just said you only need one. Well, you're right, you only need one. But part of what I'm doing is I'm using some of those other methods not to be used as a method so much as more of learning how to trade better and looking to see if there's other things that I should be doing that I'm not doing currently with whatever my primary method is. So I'm just looking at it as just a way to refine what I'm doing so that I'm able to maybe filter out some of the losses that I take, maybe be able to extend some of the wins that I get. And that's kind of what I'm looking at. So what do? I go and trade my Walmal method first when I first get up, try to make all my core, which I need to make 10 pips, set that aside. And then what I do is I then go and say, okay, if I'm learning how to do this method or that method or whatever, one of the things that I've been messing around with lately is the method that TRO introduced a long time ago, and that's the hobo method. There's lots of money to be made there. I'm by no means any expert on how to do it. I'm still trying to learn how to do it. Well, I'm not going to go and risk full account size on that. I'm going to go and risk, micro lots or mini lots till I learn how to go and use that in a way that's effective. But I don't need it. I really, truly don't need it. But at the same time, I truly believe that if you're not going and progressing, you're regressing. So we need to progress. And part of that is, okay, make the money. Now step back, learn something new.
Okay, so my full disclosure, how many methods do I use? I probably have, a whole bunch, probably maybe a dozen. We'll just go through the charts here. You guys all know I like that weekly gap, so if I see an opportunity to make money there, which I almost always do, I will take that. As far as trading off of reversals, I do the rat reversals off of the daily, weekly, monthly, or even yearly highs and lows. I also look, the opening range breakouts. This is something that you can just set aside. And so what happens is I've got all these different levels that I'm looking to enter. And so when one of them come up, I just pretty much take the entry. And it's really not too much to it more than that. I mean, for example, here price, dips into the back into the opening range here, and then I can take a long trade out of it. Same way with inside bars, pretty much a breakout method. Once again, we can take the daily high breakout, the daily low, come out of the wick zone method, the buy zone starting at the open, trying to fade the pivot, closing the pivot. That's a method. And of course, one of my favorites, the rat zone. And right now the pound is in the green rat zone, and it's in the smart green rat zone right here, even though it's purple on the screen. That's a method that I definitely like to use. Once again, I talked about fading the pivots. I call out those weekly pivots at the beginning of the week and saying, look for price to hit those levels. Once again, the missed pivots, looking for those because we can see how infrequently they're missed. Okay. Methods. As I mentioned earlier, the wick zone, in and out of the wick zone right here. You can see that. And now we've got the Walmal method, which is basically an adaptation of just the PA simple price action here at the every 10 pips using the sweet spots indicator. And you can see here this Walmal method short at 50. Let's see, that's M15. We can switch back here to H1. You can see that was worth 20 pips right there. Okay, and then this other one, I call it the map, where I'm just mapping out the different levels from H4, D1, W1, and the monthly. So we know what, as price is crossing those lines or hitting those lines, you can just take the trade. Do they always work? I mean, sometimes you get stopped out, sometimes you don't. It's just that it. And then one other thing, a couple people been asking about dragon method, and that's something else that I've been working on. And here's the new range indicator that I talked about yesterday, where we can see right now this range of 30s in the 75 percentile. So for this hour, so chances are, will it keep extending? It might. But each time it moves, it's moving up in the percentiles, and it's like pretty soon the sucker's going to be out of gas. And I know Walmal's been playing around with the with Dragon's method here, his adaptation. Right, Walmal?
Yep. No, I have. And one thing I just want to go and say is that, it's funny you went and said that you're working with all these different methods, but if you really boil it down, you're really dealing with really two methods. You're drawing a line on a chart, and you're either trading a reversal or you're trading a breakout on it. That's really what every one of these things are. It's just that you're just using different ways to learn to go and draw a line that may be significant on a chart, and then watching how price reacts to it. That's what all these different methods, so to speak, really are. So, it's the type of thing where you look at the rat trade. What is that? You've noticed that when it gets down into that zone, that price tends to go and reverse out of that zone. So what have you done? You've drawn a line on a chart, you wait for it to start to come out of that rat zone, and you jump in the trade, and you try to ride that train, Or, you see, like with the Walmal method, you see it's coming into one of those 10 lines. Oh boy, it's coming in on there. You know what? It's probably going to break it. And then when it breaks it, jump on that train while it goes and runs to the next station. That's what all these methods really come down to. I really, really love this whole idea of the dragon trade, because it's you can go and pinpoint, not to absolute accuracy, but you can go and pinpoint pretty close as to where the market's going to go and change direction. If I can go out and start doing that and be right more times than not, I can make money. But that's what it really comes down to. Am I getting in on a reversal, or am I getting in on a breakout? That's what every one of these methods do for you.
Yep, that's for true. And so, you talk about drawing lines, but it's funny because now, like with the smart rat zone, it tells me, like right now for the close minus low, I'm at the 12th percentile. So, anything under 20, that's when I want to get in, because chances are price isn't going to close in that, in that 20th percentile. So, because one thing about the statistics that have noticed is that averages, you can get skewed by outliers. But if you look at percentiles, even when you throw out the outliers, it doesn't really change much. So for example here, we can see that, we had a 29 range, we had a 31 range, we had a 32 range, but we don't have an 80, so or a 90. So when those bars get there, those are the very infrequent. Not saying it won't do it, but it's like, well, this means this bar might be out of gas, so it might be time to turn. Well, actually, the this painted bar here, the shadow, that's the H1. I guess I can switch this over to H1, but we can see here that, chances are this H1 has pretty much extended itself, and you can start to look for reversals. And you can see here's the green rat, the 20 percentiles right here. But right now we're at the 16 percentile moving up. And that's just, me being a statistical kind of guy or trader, just looking for that edge. But, basically my trades are horizontal line crosses. It either crosses a line or it doesn't.
Exactly right. And what the indicators do for you, it just makes it a little bit easier for you to go and see that movement. And it just, it's sort of like Tiara was going and kind of chiding me a little bit before because I had drawn a line on a chart from something else and never deleted it. And he said to me, why aren't you using the indicator for that? I don't know. I was stupid, I guess. But, but the reality is that's what the indicators do for you. It helps you out because it puts those lines on there. So it makes it easier for you to go and see that price movement. Is it moving to break it, or is it moving to go and reverse off of it? And that's what all these different methods, so to speak, all they do is they just point that out to you. But you're really only trading, two different methods. And it's either breaking it or it's reversing off of it. That's all that's really there.
Yeah. So and I've also got some of the multimeters up here. The first one is the candle color, and we can see here M1 and M5 are green right now, and you see prices coming out of the smart rat zone. The previous mid, the mid dots are something that are really important to me. And so here we had an open below the mid and price that here we had a midpoint crossover. Here it crossed above and then crossed below and closed below. And those are the types of things that we look for in trades. And then the wick zone, it's broken out of the M1 and M5 wick zone. It's sitting in right now. We just got a new M1, M5, so it's sitting in the body. H1, we're in the lower wick zone here, it looks like. No, actually, we're below the lower wick zone, that's bright red. H4, we're in the lower wick zone, that's dim red. And you see here on the daily and weekly, we're in the body of the candle. So, and then, so do I look and really go through each piece? No, I just glance up. If it's more red than not, then chances are, I probably want to stay out of it, but right here you can see making higher highs on the M1 and M5. So any of those rat traders here are now, you're 15 pips off the bottom, so who knows where you got in. But if you're 2 pips above the 20 percentile, which is that's the last place you want to go long. Coming off that reversal. Otherwise, you don't really have the stats so much in your favor. And so, as far as these methods go, that's pretty much it. And once again, Walmal, the fastest 15 minutes. So, so traders, how many methods do you need? Just one, right, Walmal? Just one.
Just need one. Just need one to be one that you're able to trade and trade well.
Yeah, and so you master that method, and then you just remember, it's not what you trade, it's how you trade it. So go out there and drain the banks. And I hope today's video helped you, and hopefully you're not juggling too many methods out there. So this is TheRumpledOne signing out. Oh, don't forget to subscribe and click like and click the bell and share the video.